What's up, guys? I'm back with another YouTube video today, and today's YouTube video is actually going to be a special request, and it's highly requested, and it's probably going to be one of the most important YouTube videos you guys can watch on this channel. It's literally going to give out my full day trading strategy and my full continuation model. A lot of people have been asking on a full step-by-step guide, so I'm gonna go ahead and explain it on the charts and how to actually properly trade continuations, because everybody for some reason trades reversals when it's 1,000 times harder. Continuations are literally the easiest thing ever. It makes trading super duper simple, literally 2-3 steps. That's all you need, and literally anyone could do it. The only thing that you do need to kind of work on is discretion, which is pretty much experience in the market. That's the only thing you need with this model, and you'll become profitable. That's literally all you need. And a strong draw on liquidity, which I give out for free in my Discord anyway. So if you don't learn it, no worries, you could just copy mine. So to start off, the first thing you want to have is nice trending price action. So you need to have some sort of price action, obviously, to trade. You can't trade in choppy markets. So for example, if price is like this on the high time frame, obviously I'm on the 1 minute right now, but just for the sake of this video, let's say this is on the 1 hour or 4 hour chart. Why would you want to even take a trade in this? Obviously, we're like playing ping pong. We're pretty much consolidating. We're not going anywhere. We're not going up. We're not going down. We don't know where we're going next, if anything. You never want to trade in this ranging marketplace. So you want to see trending price action. So what that means is, let me go to the 1 hour real quick. So some trending price action would mean like this. Like obviously we see right here, we are bullish over here. We see on this side, we are bearish over here. That's trending price action. We know where market's going to go. This right here is just pure chop and consolidation, ranging markets. You do not want to even take a trade here, realistically. Like, there is no point unless you have a nice super strong draw, which, for example, right here, there's a nice draw, which is this hourly gap that hasn't been tapped into. Taking this short over here to this gap is understandable, but realistically, if there is, like, after this is tapped, let's say we're over here, where are you going to trade to? Like, it's literally, it makes no sense to even take a trade. But yeah, so that's the first things first that you need is a trending market, trending price action going somewhere. So after you have that, you need to have a strong draw on liquidity. So after that, you need to find a strong draw on liquidity. And how to find a strong draw on liquidity, a lot of people have been asking for this too. Honestly, this is probably the most important topic and is pretty hard. Honestly, I had trouble learning it as well. The best way I can recommend you guys to learn it, I give it out for free in my Discord every single morning. Like, see, PA is either trash. I'll tell you exactly why it's a strong draw or whatever. I'll mark out all these draws every single morning. And I go all the way up until like September. I think I started the Discord in. I originally started in my announcements. So you can go and check the rest of my announcements or the signal, and then the signals after if you want to go back to September. Bro, the best way you can literally learn, and this is exactly what helped me, mark out what you think is a strong draw on liquidity. First, obviously, like, watch videos. If you're not in my one-on-one, if you're not getting mentored by me, obviously watch some videos, kind of understand the concept between liquidity and draws on liquidity. If anything, I can make a YouTube video about it, but again, it's not really going to help as much as you actually gaining experience and getting taught it. But if you want to do it that way, the best way I can recommend, first, obviously, kind of understand what you're doing, then mark out your draws on liquidity that you think is strong draws on liquidity. Go to my Discord and look at if I mark the same things. If I mark the same thing, then you're perfect. Obviously, you've got it down, you nailed it down. If I don't mark out the same thing, kind of understand why, like, yours is wrong and why mine was right, or vice versa. If mine was wrong and yours is right, or if both of ours is right or both of ours is wrong, whatever the case may be. And if you don't understand, I do have a trading chat, and any questions, if you guys have any questions, doesn't matter if you're not my one-on-one, I still help everybody out. Obviously, one-on-one gets more of my personal time and everything, but I still answer every single question in the Discord. Whatever you guys, any questions you guys have, if you want to ask why is this not a strong draw, I'll go ahead and answer it for you. Just text it over here. But yeah, so first, learn that draw on liquidity, and that's the best way. You can just compare with mine. Once you learn it, obviously you need to have a strong draw on liquidity. There's a bunch of different strong draws on liquidity, bro. Like, there's so many that I don't even know which one to start off with. There is imbalances, there is fair value gaps that haven't been tapped yet, there is news candles, there is no wick candles, there's pointy draws, there's hourly draws, 4 hour draws. There's so many different types of draws on liquidity, and what pretty much it stands for is you want price to go reach that point. That's pretty much what you're predicting within the next hour. Obviously, we don't use daily bias. I still think daily bias is BS. Like, it doesn't really make sense to me. If I'm going to trade for 1 hour in market open, Why the hell do I need to know what it's going to do 12 hours into market open? Like realistically, I don't care what's happening after an hour and a half, max like an hour and a half. Usually I'm on the charts for 45 minutes to an hour and I'm done for the day. Like I don't need to know what's happening damn near when the day's over. But that's why draw liquidity, you need to prioritize it. The next hour, where do you see prices going to go? Do not mark out a draw 300 points away. Obviously, it's very unusual for price to go 300 points in any direction. Mark the closest draw on liquidity you think possibly it makes logical sense for market to go to. Whether it's both sides, whether if we're strictly bullish, obviously go only bullish. Whether we need a retrace, even though we're bullish, then you can mark the lowers for the lows for the retrace, like any gap that hasn't been tapped. Whatever. After you get that strong draw on liquidity, then you're going to proceed with actually finding your entry. So 1 hour, 4 hours for strong draws on liquidity. 4 hours for where you're going to see markets going. 1 hour is where you're going to mark your actual draws on liquidity. Then you're going to go back into the 15 minute. 15 minute is going to help you find some higher time frame fair value gap. So obviously if there's like a 15-minute bearish fair value gap, that's going to really help you out if you're on the 1 minute charts and it goes and retraces into 15 minute and gets nice displacement out of it. That will help you out a lot. 5 minutes, same reason. Check if market's ranging. If market's not ranging and we're getting, more like pretty much, I don't use breakup structure, but we're breaking structure. We keep going either down, we keep going up. Then that's how you know we're not ranging. We're in a trending price action. 1 minute is for the entries. So after you got all that down, you mark out your 5 minute fair value gaps, 15-minute fair value gaps, if there is any. You have your draws on liquidity. You see trending price action. Perfect. That's literally all you need. Now you sit down, sit on your hands until the model presents. So what you're going to do as the model, pretty much, let me just break it down. All you need is some sort of displacement followed by a retracement. That's literally all you need. So let's say we have this strong draw on liquidity. So we have the trending price action over here. I drew out price action. So this draw on liquidity is my trending strategy. This is my strong draw on liquidity over here. This is my trending price action over here. Now this is the full model. We obviously are displacing towards this draw on liquidity over here. Let me delete this. We're displacing towards this lower draw on liquidity. Let's just say this is a news data low. So we want to go, we see this is a perfect strong draw on liquidity. All we need to do now is retrace and get nice displacement out of it. So we retrace back into a, for example, 5 minute fair value gap or even a 1 minute. It doesn't matter, but it doesn't even have to be a fair value gap. Just any sort of retrace that actually makes sense. Obviously, if we dumped like 100 points and you retrace 20 points, that's not a valid retrace. You need to retrace like at least 50% or at least 40%. So it kind of makes sense for price to displace out of it. But we have this 5 minute fair value gap. Let's just say this is a 5 minute fair value gap. We retrace back into it. This is all we need. Second, we see that retrace, we see some sort of displacement invalidating that retrace leg. So obviously retrace is big enough that it creates a fair value gap in itself. Let's just say this is not the model, but let's just say it creates a fair value gap while retracing. So a bullish fair value gap, retracing into this 5 minute bearish fair value gap. We need to see this displacement invalidate this fair value gap that was caused from that retrace leg. If we could see that, that makes it extra A+. But let's just say there is no fair value gaps that were created during that retrace leg. We just need to see some sort of displacement that's bigger than that retrace. So this retrace is over here. Obviously, this displacement candle is bigger. Now, I'm not saying one candle is just going to come down and take out this draw on liquidity, but as long as we see some sort of displacement down, which proves that we do want to take that. So we got the confirmation to that draw on liquidity that this is a strong draw. So this trending price action is a confirmation. We got that retracement into a fair value gap or a strong retracement. We got a displacement out of it, and there you go. That's literally the full model. You enter over there, wherever, somewhere around there, usually after the first candle. You do not want to enter under the internal low because this is going to be your break-even point. So your stop loss goes where that retrace end was, because realistically it doesn't make price to come up and change the structure and break up structure to the right, like upside. It doesn't make sense for price to do that. So if it does come up this way, I already want to be out of the trade anyway. So stop loss goes over here. Take profit obviously at the draw on liquidity. You want to get at least a 1-to-1 RR, and that's pretty much a full model presenting itself. And now let me show like actual valid pictures of it so you guys can see like a better idea. And once you gain discretion, you can kind of take a little more trades like out of the model. And one thing I want to do, like a big disclaimer, do not trade like a checklist. Now, obviously I told you like all these different steps that you could do. Do not trade it like an actual step-by-step, like, okay, I saw a retrace, I saw displacement, I'm going to enter. No. You need to actually have context behind why you're entering. The higher time frame plays a big role into this. The 5 minute is ranging and you're entering on 1 minute chart. Don't get blinded by the 1 minute. The only time you enter the 1 minute chart is because you have high time frame confirmation. You know damn well that you're going to go to that low. You do not just enter just because you see the model present itself. This is where discretion also comes into play, where you've seen stuff not work out over a period of time, and now you won't take that trade again. For example, one thing I've learned recently, that was like pretty much my last like thing learning, was when price is overextended, to not take trades. I took so many trades and I always lost the overextended ones. Then I realized I don't need to take a trade if it's overextended. Since that bumped up my win rate like around 5%. And obviously 5% goes a long way in the long run. But let me show you guys like actual trades. Oops, I did not mean to open that. This is an okay example. So for example, we have the strong draw on liquidity over here. Obviously I don't remember what the exact draw was. Let's see, did I write it out? Oh yeah, so it was a data low. Oh no, sorry, it wasn't. Data low was taken. If we reject lower, we have another draw. So I didn't really say what draw it was, but I'm assuming it was some type of 1 hour low. So we have the strong draw on liquidity. We obviously see prices trending towards that draw on liquidity, which confirms that draw on liquidity. You don't just have a draw on liquidity and expect price to take it. You need to get some sort of confirmation. So this is our confirmation that this is the draw that we want to take. We get a nice retracement back up and tapping into this 1 minute fair value gap. Now obviously if an invalidation like this occurs, this does not mean that the trade idea is over. A lot of people also struggle with this, and I actually struggled with this too. I was hesitating on setups for something stupid like this. This was a 5 minute fair value gap. So invalidating a 1 minute fair value gap to go tap into a 5 minute fair value gap makes so much more sense. Like it literally makes you want to take the trade more. But in the moment, obviously, you don't see that. So we retrace back into this 1 minute and 5 minute fair value gap. Right out of that, we get a nice displacement candle that pushes lower. This literally proves me, okay, we did what market wanted to do. Now we're just going to go take out the draw on liquidity. And that's exactly what happened. I entered here, stop loss at the top, take profit over here, and there you go. Bang, that was one trade. Let me go to another one. Perfect. This is like literally a textbook example. We have a strong draw on liquidity over here. Price action is obviously trending towards, so we're confirming that draw on liquidity. We get a very nice displacement candle. Honestly, you can enter right here as well, but I like waiting for extra confirmation. So because you could get retraced realistically. Like if you get retraced on this, you're gonna get stopped at. You never want to enter a trade when it's gonna retrace. That's like the dumbest thing you could do. So I waited for a retrace. We retrace back into this 1 minute like gap perfectly. We get a very nice displacement candle. Now, obviously, the displacement was a little too much, so that I couldn't even enter in time. So that's why, based off how fast the candle is moving, you can kind of see if it's like a crazy displacing candle. You can enter mid candle. So I entered mid candle over here, so I can actually reach, obviously, have 1-to-1 RR, and that's how we hit that take profit. This one is another perfect example. Trending price action to these lows over here. Retrace. Obviously, this didn't retrace in any sort of gap, but we retraced a nice displacing retrace. We got two bearish candles, which was pretty much equivalent to the size of the retrace, which invalidated the retrace leg. Boom, entered right there. Take profit at these lows, stop loss at this top. That's literally my full model. Like, it's the most simplest model ever that literally anyone could trade this model. But this is the full model. I hope it really helped you guys. If you guys are learning to move into continuations, perfect. Kind of forget everything you know about trading and move into continuations. If you're completely new to trading, I really do recommend getting into continuations. Reversals just don't make sense to me. Like, why would I want to wait for price to come take out this draw on liquidity, then take an entry to the higher draw on liquidity up here? Why does that make sense? I'm just gonna wait extra long for, like, if I already know price is gonna come take out this draw on liquidity, and if that needs to happen for me to take an entry to this draw on liquidity, it's just like 2 steps for no reason. Why can't I just take the trade to the first draw on liquidity, and if anything, take another trade to this draw on liquidity as well? Like, it just doesn't make sense. I never understood reversals. I really like continuation. It's definitely the simplest way of trading. But I really hope this video actually helped a ton of you guys out. I'm actually really thinking it will help you guys out a lot. I do have a complete free Discord. I give my free signals out and daily draws on liquidity out every single morning. Again, it's completely for free. You guys can join with the Discord link in my bio or through the WAMP link. If you guys do want a one-on-one mentorship with me, I do provide that as well. You guys can join in with the WAMP link or the WAP link, or you can DM me on Discord, Instagram, whatever the case is, and we can speak about the mentorship and what services are offered there. Obviously, I'll hold your hand all the way to profitability with the full refund money back guarantee if you do not turn profitable within the given time frame, if you actually provide effort. Obviously, trading is fully effort wise and discipline. That's like the main thing. But yeah, overall, I really hope this helped you guys out. If you guys have any other videos you guys want me to make or anything, I know someone wanted me to make a video on SMTs. I don't really use SMTs at all, but sometimes like if I do see it and it goes in correlation with my like trade that I'm gonna take, obviously I do use it, whether it's good or bad. But I can make a video if you guys really want. And if you guys want any other like ideas or any videos you guys want me to make, again, I do this complete for free. I'm not gonna charge you guys for this stuff. People literally charge for this information, but I don't really mind. I just want to grow this Discord and we have a full trading community all together. Overall, I appreciate you guys watching this video to the end, and I'll see you guys in the next one.